All right, good morning, everybody. Thank you for tuning into this week's S&P Sector Spider Preview, where we are going to look at what the economic sectors that consist of the S&P or that make up the S&P 500 have been doing. And this is important because this is going to be an interesting week coming up. I don't think we'll see much on Monday because it's the Columbus Day holiday. So I think the bond market, or I'm sure the bond markets are closed. But you'll see that there's been some big trend breaks, like for instance, the tech sector broke its uptrend, and there are some other things that are testing important support levels. So in my opinion, there's a good chance that we could get a meaningful sell-off fairly soon if these things break. And I think you should especially pay attention to this because, as you all know, if you follow me, I really can't stand the fake news financial media. And I believe that CNBC lost more money for Ponzi and Madoff put together. So last week I was watching Neil Cavuto, who I actually like. I think he seems like a good guy and he gives good analysis. But he was showing this chart during the Kavanaugh Supreme Court thing where it was like, well, it looks like Kavanaugh is going to get nominated. The market's up 2 points. It looks like the nomination's not going to go through. It's down 2 points. Let me tell you something. There are no traders sitting around on Wall Street trading off what's going on with Kavanaugh. Right? It's just random noise. When you have the Dow Jones is an index of 26,000 and you have a 100-point move. That's nothing. That's just noise. I mean, if you had $26,000 and someone gave you $100 or took away $100, would that be significant? No, of course not. So anyway, like I say, 99% of the time the market moves have nothing to do with what they're saying on TV. So here's what moves the markets in financial. Oh, by the way, I have a guest sitting with me today. This is my daughter's guinea pig, Porky. Say hi, Porky. He could probably give as good analysis as some of the people on television. He's a big, chubby guy. So he has an appropriate name, is Porky Pig. So anyway, so this is what moves markets. In financial markets, there are certain price levels that are more significant than others with regards to the amount of supply and demand that exists at them. And we say that all the time. And prices are always doing one of three things: going up, going down, or staying the same. So if you could figure out these trends and recognize these levels, you can make money. Now, think about when I talk about random noise. Say there's something that has nothing to do with Brett Kavanaugh or the Turkish lira or trade wars. Just say Billy Joe Sixpack or Bobby Punch Clock needs to raise some money because their daughter's getting married or they got to bail their son out of jail. So they have money at Charles Schwab and they want to raise $100,000, so they withdraw $100,000. So the traders there need to sell a basket worth of $100,000 so they can withdraw the money. They need to raise the cash. So that is noise. That is a perfect example of noise. Now, when you consider that that happens how many tens, if not hundreds, if not millions of times every day, all across the world relating to the stock market, you can see how noise is a big mover. The other thing that's going to move the markets is when trends break or they bounce or break off of or break important levels. Okay, so here is the SPY since June, and last week we had pointed out that this trend was breaking. So sure enough, we had this move, and we have to watch this 286 level because this is an important support. You can see it was support on, I guess that was Friday, so where the lows were on Thursday. Support back here in early September. Was resistance here. And as you know, if you follow me, this 286 level is important because back here it was an all-time high. All right, so when I say that there are certain levels that are more important than others, this is a perfect example. Right, 280 is an important level. It was resistance here, it was resistance here, it became support here. My guess would be if this breaks, and I think it probably will, we're going to see some support at the 280 level. Why isn't 283 important? Why isn't 282 important? Well, I mean, I guess they're important shorter term, but that's really just not what I look at. So if you know where these levels are and you know what the trends are, see, if you were watching this and say, oh, gee, the trend just broke, maybe I should short some or sell something. Well, you don't need to watch TV to see that. You just look at these charts. You don't have to worry about trading off of the Brett Kavanaugh news. All right, so here's what I mean with the tech sector. And the tech sector has obviously been leading the market. I mean, it's the biggest percentage of the S&P, so that's no surprise. So we're in this uptrend. I mean, you could even say this is an uptrend from back here. And remember, uptrend lines and downtrend lines aren't anything magical. They're just graphical presentations or illustrations of the supply and demand dynamics that are occurring in the market. At least if they're drawn correctly and if they're understood correctly, that's what they should be. All right, so you can see we got overbought. We mentioned the 75 level because it was resistance here. So lo and behold, I guess I'm a psychic because I identified an area where the market might sell off from before I watched any Brett Kavanaugh hearings. All right, so anyway, whatever. I guess I should stop on that rant. So going forward this week, I'm going to be watching this the 73 level. If this breaks 71, and that might not sound like a lot, but that's more than 2%. And for that to happen in the course of a week or two, that is a significant move. So here's the financials, and I pointed this out last week, and it's similar action in the material sector, which we'll get to at the end of the presentation. You can see these things it became very overbought. Okay, broke out of this range that had been in for a long time, and then just went into free fall after that. So this could have something to do with the quarter, this quarter coming to an end, some kind of a rebalancing or something. So anyway, so now we're back up trading right around this 28-25 level, which has been important since April. And again, all throughout here, and I've pointed this out before, this is time progressing. This is April, May, June. The financials did not participate in the broader market rally, which is one of the things I've talked about, which is why I think we might be at some kind of a top here. And that's why we're seeing these negative technicals or bearish dynamics, because I've mentioned we have interest rates going up. We have oil that's, I think, up about 50 or 60% in just a year. People are way too bullish. And the market's been going up. It's, markets don't just go straight up. They need to go down as well. And we're really just kind of due for it. So the fact that the S&P broke that trend line and sold off is not surprising to me. But we'll see. Okay, here's the financials long term. And you can see that this is where the top was right here before the crash. It's pretty amazing. These things, it even goes off the screen. These things got down to like $4 a share. And this is where they ran into resistance in January. So that's another bearish dynamic for the market, is this overhanging supply in the financials. So if this thing rallies again, I would think we're going to see resistance there again. Here's another thing that's broken its uptrend, the healthcare sector. And I mean, this thing has been going since there, and then got to this 92 level, which is important because it was the all-time high at the top here. So it just spent some time consolidating. This is what technicians call a pennant or a flag pattern, which makes sense. Things are in a trend. They get ahead of themselves. The buyers say, all right, let's take a break. Let's wait a while, see if it comes in. Things trade sideways. The buyers say, it's not coming in. Let's get back in motion. Let's keep buying it again. So kept going up. But anyway, we broke this trend. If we head lower, I'm going to be looking for support around this 92 level, obviously. If it breaks that, this, I guess, is about 87 down here. 87. I think that would be a level to watch for support. It's right where the recent rally started from. Whenever there's a level that a rally starts from or a sell-off starts from, those become important in the future if the markets get back there again. So you can see we spent some time consolidating and then we just rallied. All right, here's consumer discretionary, and you can see here, broke the support, this 114 level. I'm going to be watching the 110 level for support. It is oversold though. You can see down here, so it might get a little bit of a bounce there. But again, this is more negative dynamics. Okay, and here's the industrials. They've been consolidating under this 80 level. Now, we had mentioned that this was could be a resistance level. The reason why, it has nothing to do with Brett Kavanaugh or the Turkish lira, or whether Brett Kavanaugh shortened the Turkish lira, or he's talking about trade wars, or blah, 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 blah. 80 was the top back here. So it just makes sense that when we get back up to 80, we're going to run into resistance there. It got overbought, and it's been trading sideways since. Okay. So again, here's another sector that's got some supply hanging out just above current levels. Okay, here's consumer staples, and this is a perfect example. What do you want? You want to buy some consumer staples, Porky? All right, so anyway, my kids got me a shirt like world's craziest guinea pig dad. So, I mean, they're really my daughter's guinea pigs, but I actually take care of them. But so anyway, so let's look at this 5350 level. And here's another example of how you can see certain levels are more important than others. It was support pretty much to the 10 cents in February and March. Then it became resistance here in April because support becomes resistance and vice versa. We rallied here, and then you can see we spent some time consolidating around it. And that, I know it doesn't look like it's big, but that's probably 2 or 3 weeks there. So anyway, we broke the uptrend. It was support here. Now it's testing support here. So here's another thing to watch. If this thing breaks, I think we could get right down to 50 with, I don't know, a couple weeks or a month or whatever. So, and let's watch this 50 level, because this 50 level is really very important. You can see here how it was the top all through May. Now let's take a look at the longer term picture. Okay, look at this 50 level, and show this to people that say technical analysis isn't real, although I don't like that term. But anyway, 50 was the top throughout 2015. And you might say, well, gee, Mark, it looks like it got higher. Well, I'm sorry, it got up to 51 or 50-50. Was the low here last September, so a year ago, or just over a year ago. So again, if this thing sells off and it gets down to 50, we're either going to see a great buying opportunity or a great short opportunity or selling opportunity. Could take a while to play out though, and I'm talking, 3 months, 6 months, something like that. But anyway, it's another example of how there are certain levels that are just more important than others. All right, here's the energy sector. And again, here's another sector that's running into resistance or has resistance right overhead. You can see it's still in an uptrend. But you can see the 78 level is important, okay? It was resistance here. It was resistance here back in May. This is January over here. Longer term picture over the 78 level. You can see the market's failed 3 times, and it's actually more. This is from like a month or two ago, because it got there and it failed there too. So I guess I'll change this to 4 for next week. But you can see we're testing it again, and I would say that there's probably a considerable amount of resistance there. I'm not saying it's not going to break through it, but it's just another thing that concerns me. Well, I don't know if it's a concern, because people can make money when the market's going down too, but I'm just saying, if you are aware of the supply and demand dynamics, you're going to have a much better idea of what's going on in the market than what some idiot on CNBC is saying. Because like I said, 99% of the time when the market moves, it has to do with this stuff or noise. It's not because of some fundamental news. I mean, to think that a bunch of traders are sitting around and saying, "Oh, Brett Kavanaugh's going to get confirmed, buy. Brett Kavanaugh's not going to get confirmed, sell." So I mean, to me, that's just absolutely ludicrous, and it's a de minimis move. 100 points on 26,000 is de minimis. So that's why I try not to watch the media. I'll usually have on the History Channel or something about outer space or the Animal Channel or some sports. I love it when the golf's on. I just always have that in the background. All right, and then here we go with the materials. And again, this is another thing that, look, it's testing this 58 level. And you can see this thing has been support going back to June. All right, so this is another thing watching. If this thing breaks, could have a decent move down. All righty, and last but not least, here are the utility sectors, or the utility sector, and you can see once again it found support at 52. It was 52 was resistance here, so it became support here, and it became support again with the most recent sell-off. All right, so if it heads lower, there'll probably be support around 52 again. If that level breaks, next meaningful support's down at 49. All right, everybody. So that's it. Thank you for tuning in. Just remember, if the market does go down this week, you heard it here first. Sorry, I don't mean to be like that. I just think if you have an understanding of these things and you know where the levels are, you'll have a much better concept of what's going on in the market. Like, for instance, the market might sell off one day, and on television, they're going to go down there and be like, oh, it's the Chinese economy, or it's this, or it's that, or it's the other thing. But the reality is, you'll know that, oh, well, the market just sold off because an important support level in the tech sector broke, or an important uptrend in the healthcare sector broke. All right, because that's what's moving the markets. It's not fundamental news that they talk about on TV. All right, so that's it for this week. Thank you, and I hope you tune in again next week.